This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Vladimir Putin is winning the war of attrition against Ukraine. Although the Russian people are also suffering, the pain is not enough to force the newly re-elected president to change course. He might reconsider if the West could squeeze Russia's oil revenue, but that will be hard to engineer. Even if receipts from hydrocarbons stay at the same level, the Russian government is going to have to squeeze its citizens. The economy is overheating as Putin, who has just secured a new 6-year term to extend his 24-year rule, pumps more money into the war effort. Defense spending, which is budgeted at 10.8 trillion rubles, $118 billion, this year, has trebled since the war began. The central bank has jacked up interest rates to 16% and said official borrowing costs will need to stay high for a long period to get inflation down to its 4% target. The government has imposed capital controls to prop up the ruble.
China's crude oil throughput in January and February rose 3% compared to the same 2 months a year earlier, data showed on Monday, as refineries raised production to meet strong demand for transport fuels over the busy Lunar New Year travel period. Total refinery throughput in the world's second-largest oil consumer was 118.76 million metric tons, equivalent to 14.45 million barrels per day, BPD. Data from the National Bureau of Statistics, NBS, showed on Monday. China combines data for January and February into one release to smooth out the impact of the Lunar New Year holidays, which fall in either of these months each year.
Moving on to the top news in the energy sector.
Russia will increase oil exports through its western ports in March by almost 200,000 barrels per day, BPD, against the monthly plan to 2.15 million barrels of oil per day, and market participants expect a further increase in exports amid ongoing drone attacks on Russian refineries. On a daily basis, shipments will increase by 10% compared to the initial plan for March, Reuters calculations showed. Russian oil refineries have been suffering from a series of drone attacks from Ukraine, including most recent attacks on Rosneft refineries over the weekend.
China's coal production in January and February fell 4% from the previous year as high stockpiles and forecast lower prices up a damper on mining output. China, the world's largest producer, mined 705.27 million metric tons of coal in the first 2 months of the year, the National Bureau of Statistics said on Monday, down from 734.23 million in the corresponding 2023 period. China releases combined data for January and February to account for distortion caused by the irregular timing of the week-long Lunar New Year holiday, which fell in February this year. Next, we have the top news in metal markets. Prices of iron ore futures rebounded on Monday after upbeat data in top consumer China renewed hopes for a pickup in steel demand in coming weeks and as some traders liquidated their short positions. The most traded May iron ore contract on China's Dalian Commodity Exchange, DCE, recouped lost ground and ended daytime trade 0.9% higher at 803 yuan, $111.56, a metric ton, following an 11% week-on-week drop on Friday. The benchmark April iron ore on the Singapore Exchange was up 3.7% at $103.65 a ton, as of 0835 GMT.
China's primary aluminium output in the first 2 months of 2024 climbed 5.5% from last year as higher prices encouraged production, official data showed on Monday. The world's biggest aluminium producer churned out 7.1 million metric tons of primary aluminium in January and February, according to data from the National Bureau of Statistics, NBS. China combines output data for January and February into one release to smooth out the impact of the Lunar New Year holidays, which fall in either of the months.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures climbed higher on Monday as stronger rival oils helped boost prices, but smaller than expected export volumes and higher output estimates in certain regions capped gains. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange gained 0.47% to 4,240 ringgit, $899.07, by the afternoon closing. It rose as much as 1.89% earlier in the session before paring some of its gains.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.